Good afternoon. This is Tony Cherniawski, President of the Practical Investor, LLC. Today is October the 15th, 2008, and the question of the day is the bailout working? If you recall, the bailout started on the last week of September. It was not passed by the House of Representatives. By the way, the bailout was crafted by the Senate. All spending bills are supposed to be crafted by the House and approved by the Senate. Therefore, there's a constitutional problem involved with the bailout. That being said, let's talk about what happened to the Standard & Poor's after October the 3rd when the House and Senate both passed, finally, the new pork-laden bailout. What we have is what you see here is a chart of the Standard & Poor's, and you'll notice that on the open of the 4th of October, the Standard & Poor's was at about 1,150. Since then, we've had a very dramatic decline in the Standard & Poor's over the last 2 weeks, ending up at 839 on the Standard & Poor's index. Now, for those of you that know Elliott wave, I've done an Elliott wave count here, and it looks like we may have completed the third wave down. There is a dilemma, though. The dilemma is that Head & Shoulders targets are usually taken out by a third wave. So what we have is we've got two possibilities here, and I'm just going to describe them briefly. Number one, the fifth wave. Now we may have completed the fourth wave, and going into the fifth wave, we should take out the Head & Shoulders target at that point. That's possibility number one. Possibility number two is we may not have completed the third wave yet, and that's why I have a question mark there, something that we should consider and ponder, considering the fact, from another point of technical analysis, that we have until the end of October, potentially, for this downtrend to continue. So we either have one or two more waves down to new lows below 839. We should be taking out the Head & Shoulders target of 824. The interesting part about this is the next support level that we have technically in the market is the October 2002 low at 763. So if we do the math, the market still has from 1,044, which is Tuesday's high, about a 17% decline to 824, or possibly a 27% decline to 763. Or, if that doesn't hold, possibly even more. This is just to alert you of the fact that the market doesn't buy this bailout program at all, and we have some trouble ahead of us that could be very critical. What I'm saying here in this program is not meant to be investment advice. We are registered investment advisors. We are not telling you to buy and sell any securities at this point. We are just simply making observations about the market that you ought to be aware of. Take that into consideration as you do your planning with your investments. You can reach us at www.thepracticalinvestor.com, or you may email me at tonyc@thepracticalinvestor.com for more specifics. We will be glad to send you our Form ADV and have you take a look at the kind of work we do. Thank you very much for your time, and I hope this has been helpful.